Hello and welcome to Opening Moves.
Let me also welcome in Rishi Maheshwari, research analyst of Centrum Broking, who joins us now. Rishi, morning. Are you pleased with the guidance number? Because certainly everyone we've spoken to since the morning is giving it a thumbs up.
I think you won't find a second opinion on that. The voice is out. All you've got to do is just go out and buy Infosys. At this point in time, your fellow analyst on NDTV just mentioned the concerns largely were BFSI, the concerns largely were volume increase, the concerns again were whether mark-to-marks will be very high or not, and as a result of which whether you'll not see as much of a hype which could have been propagated by analyst community. But I think all that has been defeated by Infosys by giving such strong guidance numbers. And on top of that, the results itself for this quarter has been strong. For the last 3 quarters, we've always been factoring into what have been the results. And then the guidance has been more or less in line. But this quarter has been exceptionally great. I don't perceive that anybody would have presumed 100 rupees, 101 rupees EPS guidance. More than that, nobody would have presumed 1302 crore of a PAT. Though the revenue line is good, I think they've done one thing very reasonably good is to cut down on the G&A by around 100 bips. Which is what has told their EBITDA margins also at around 30.5%. I think that's a thumbs up to Infosys.
Rishi, I have to play devil's advocate, but and quickly ask you a comment in terms of just the stock price. Has it just run up and already factored this in? You're saying nobody could expect this, but at 1800 rupees, you buy Infosys for what target now?
Clearly, before this, our EPS estimates for FY10 was around 116. You can easily ascribe a multiple of 19 times at this point in time to get a value of around 2,200 at this point in time. I think there is still a lot of upside left in the stock, and with this kind of guidance factored in, remember the question was largely that the first half will not grow as much as they've liked, and the results will largely be back-ended. Now, keeping in mind that the results can still be back-ended, this quarter itself has shown a robust growth. If you also track quarterly results for the last 5 years in the first quarter, they've always beaten their guidance in the first quarter. This quarter was a little different when the results were expected to have a back-ended growth. So, factoring that the first quarter is good and the next 2 quarters are going to be on an even line, I think there is absolutely no cause of worry. The only thing is that the rupee for the guidance has been factored at 43 rupees right now. You may see a slight blip, and that's why we still maintain our EPS estimates for FY10 at 116. But P multiples are going to expand.
I was coming exactly to that point. At 43, they've guided at about 43 to $1, 43.04 to be precise. It leaves kind of no room for error. Of course, currency can go in their favor, it can go against their favor. It's been extremely volatile. So you've got a management which traditionally used to be very conservative, now actually is guiding at about 43.04. That might be the industry norm, but looks slightly lavish to me.
Well, there's a policy of the company cannot be challenged on that front. When it was 39.9, the last guidance was made at, it was again, the rupee was a lot of economists had believed that it will move up. So I personally believe that can't be challenged on that front. However, having taken that into consideration, that is why we've kept our EPS estimates at a tad lower than what it could have been if we built in 43 rupees. I think even if the house view is that the rupee will hold at 41.5, I still believe Infosys will be able to get in their 99 to 101 rupees. Remember, the pricing is not factored in the guidance, so you can easily factor in at least a 2.5% increase in pricing for the entire year. That is the minimum that Infosys has delivered ever. So having taken that, take away 2.5% of the rupee and build that into pricing. So a lot of ifs and buts, but I think more or less it's been very good.
Rishi, are you a little disturbed by this movement on Infosys? Open 2% up and then hugely off at about 2% down now in the negative.
Yes, I think it's unwarranted right now to have a 2% down on that front. I personally think there would be arbitrage that will be played around for a higher gain on the same day, and there'll be booking of profits that may have happened. But if you've looked at the operating metrics of the company, that looks very appealing at this point in time. BFS was the main concern, volumes was another concern. Both fronts the company has managed to deliver. Now, yes, the EPS guidance is at 43 rupees, but I think you can easily take at around 41.5 and still reach to our price targets of a 20% upside from here for the entire year. I would certainly still advocate that it is the right time to have a shot at the Infosys.
See, once the management starts speaking in a little while, and if the commentary is not all that bad, would you hope for a little bit of a bounce in the second half of trade for Infosys and the other technology stocks as well?
Well, it's difficult to predict on day-to-day trade how will the stock movement be. We're fundamentally here to analyze the business, and I think on the business front, I personally perceive that things have been up to the mark. The point is also that yes, there are concerns outside, but what will the concerns impede the growth to less than 15%, less than 17%, less than 18%? I perceive not. I perceive that more than 25% growth is, or almost 25% growth is what we can envisage in this year. And as a result, I would still perceive that as a long-term investor, this is an opportune time to get invested into IT, and the bellwether is the best bet, Infosys I mean, also largely because of its hedging positions right now. Now mind you, they've shown extreme hedging position loss of $19 million. So, and despite this, they have come up good guns on their net bottom line. So I would personally perceive that I'm not too sure about the intraday movement, but as a long-term opportunity, it is a clear buy for me.
Fair enough, Rishi Maheshwari. Thanks so much for joining Moves. We'll take a quick commercial break here. Keep tracking the markets when we come back. And also on the other side, more market men will be joining us to take us through what's happening in trade.